So let's we start new chapter for your new SYBCom class, Partnership Final Account. This chapter we have done FYSC, SYJC and FYBCom. But in SYBCom we are going to see the new types of adjustment, new types of final account. Now in this case, let's we revise the definition of partnership final account as per the Act 1932. So what definition says that? Definition says that as the relation between the person, this is one word, as the relation between the person. Normally whenever we want to do business, we will come together. Two or more person coming together and they will start the business. In this case, they will develop their relation. They will develop their relation relating to a business matter. Who have agree. At the same time, they will agree. They will agree for what? To share the profit of the business. So whatever the business and the profit, we will share in our profit sharing ratio. And this business carried on by all. Whatever the partner are there, they will be act for the business. They will do the business. They will do the active participation in business, or any of them active for all, or out of two or three, any will be act, and other limiting the sleeping partner. They will just invest their money and they will not disturb the business. So out of two or three, anyone can handle the business, and this is known as a definition of partner's final account. Now in this case, two term is very important. The person who are coming together and doing the business, they known as partner. They known as partners. And second, whenever they will come, they will do the agreement. They will do the agreement, and that agreement is known as, very good, partnership deed. Deed is a legal word. Deed is a legal word. That means they will agree. Whatever the agreement done, all are agree and they will continue their business. So this is the definition of the partner's final account. Now let's see the second point. Now for SYBCom point of view, SYBCom point of view, following are the main feature of the partner's final account. Actually, when we see the definition, in definition itself, all the features of the partner's final account involved. But SYBCom point of view, let's we study the 5 main feature of the final account. First, interest on drawing. Whenever nothing is mentioned about the interest on drawing, we assume nil. We assume nil. Nothing should be given to the partner when they withdraw the money for the purpose of personal use. So nothing will be charged from them. So interest on drawing always nil. Second, interest on capital also nil. Nothing should be charged on interest on capital. Third is very important, interest on loan always 6% per annum. If problem is silent about the interest on loan, at that time we have to see 6% per annum. So this is a third feature of the partnership final account. After that, for salary and commission. Salary and commission not given to the partner. In partnership final account, nothing is mentioned, nothing is given to the salary and commission to the partner. Fifth, after this, profit and losses. Profit and losses always divided on the as per their agreement. If nothing is given, that means we assume equal, equal and equal. So these are the 5 very important features while solving the partnership final account. See the once again, interest on drawing nil, interest on capital nil, interest on loan 6% per annum, salary and commission nil, profit and loss account as per the agreement, and if nothing is mentioned, equal, equal and equal. So this is second feature in final account. Now in this case, we are going to study 3 types of final account. First is called admission. Second is called retirement. Third is called date of the partner. Now in this case, whenever we do retirement, at the same time we are going to problem of death, and when we are doing the debt final account, same time we are doing the retirement. Both are same, only one word are changed, that we'll see whenever sum is coming, but at present we will see the admission of partner. So in final account, sometime new partners comes in, at that time we have to do the final account. So in this case, we are preparing trading account, we are preparing the profit and loss account, and we are preparing the balance sheet. But in case of admission, sometime format will be changed. Now how the format will be changed, let me see. In case of admission, suppose the partner is admitted in the financial year, first day of the financial year or last day of the financial year, there will be no change in format of profit and loss account. Trading account remains same. Profit and loss account will be changed if partner is admitted during the financial year. If the partner is admitted on the first day of the financial year or last day of the financial year, there will be no change. See them. Suppose my financial year starting from 1st April 2021. So my year ending will be 31st March 2022. If partner is admitted on this date or on this date, there is no need to change profit and loss account format. But when partner is going to be admitted during the financial year, at that time we have to change the format of profit and loss account. Let's see how our format will be changed. You know, April, January, February, March, April, May, June, July. Now in this case, suppose partner is admitted on 1st July. What will be condition? Take example, starting there, how many partner? A and B. Their financial year starting from 1st April, and partner is admitted on very good 1st July 2021. Now let's see why our format will be changed. So starting A and B. So I'm starting from April, May, March. So we always prepare this type of the working note in SY BCom under the partnership final account, whether the admission, retirement or debt. This working we have to do. So I am writing month April to March. So now partner is admitted on 1st July 21. C is admitted. So after admission of partner, how many partner will be there? 3. Before the admission, how many partner will be there? 2. 2, because this is admission of partner. So let's see the April, May, June. How many months? 3 months. How many partner are there? A and B. Now remaining July, August, September, October, November, December, January, February and March. How many months are there? 9 months. And how many partners are there? 3 partners. And we are preparing the balance sheet for 1 year. Now in this case, balance sheet our profit will be divided in 2 parts, pre and post. Why pre and post? Because starting April, May, June, how many partner? 3. And post, how many partner? 3. So we have to find out the profit before pre and post. Because pre, how many partner? 2. Post, how many partner? 3. So whatever we earn the profit pre, that is going to be A and B. Whatever we earn the profit in post, that will go to A, B and C. Therefore, we have to prepare profit and loss from pre and post. The period before the admission of partner is known as the pre. What we will call pre. The period which are before the admission of partner is called pre. The period which are after the admission of partner is called post. And when we are finding out such a type of the period, and that is known as the time ratio. This is known as a time ratio. So each and every case we have to find out time ratio, and this information always given in adjustment. For starting of the year, end of the year, and date of admission of the partner always given in the question. So in that case, we always prepare this diagram. April to March, we will take the date of admission. We will see the how many months are there, and that period is called pre. After the admission, we will see how many months are there, and that months will be taken to consideration. So in this case, how many partner is admitted on 1st July, and my finance year April to March. So before July 3 months, and that is called pre. After admission of partner, how many months? 9, and that is called post. And this pre and post is called the time ratio. So in this case, how many time ratio? 3:9 is equal to 1:3. Now, why we are preparing the time ratio? That we have to take into consideration. Now, time ratio means fixed ratio. Time ratio means all those expenses which are fixed. All those expenses which are fixed always divided on time ratio. Because we have one more ratio, that is known as sales ratio. So first we will see the time ratio. So for example, salary. Salary always fixed. So that is always divided on time ratio. Second, rent. Rent is always fixed. Therefore always divided on time ratio. Third, printing and stationery always fixed. So that is always divided on time ratio. Depreciation on machinery. Depreciation on machinery always fixed. Therefore divided on time ratio. Electricity bill always divided on time ratio because that is always fixed. Yes, anyone? Wages depend on the sales now. So the etc. There are so many expenses which are always fixed and that always divided time ratio. Now come to the second ratio, and that ratio is known as sales ratio. So very important, sales ratio. In this question, whatever the information is given in the question, we will find out the information about the sales, and with the help of the information we will find out sales ratio. If information is not given, ratio is always 1:1. Sales ratio is very important for the dividing gross profit. So GP always divided on sales ratio, and sales ratio is not given, we take 1:1. So all those expenses which are not fixed, always divided on sales ratio. Now another way to see the meaning, all flexible expenses which are depend on sales always divided on sales ratio. For example, salesman salary always divided on sales ratio. Salesman's commission depend on always sales. More sales, more commission. Less sales, less commission, always divided on sales ratio. Advertisement always divided on sales ratio. Publicity always divided on sales ratio. Depreciation on vehicle, depreciation on vehicle, sales ratio, because this vehicle used for the purpose of selling the item. More sales, more expenses. Less sales, less expenses. So this is about the sales ratio. So for SY BCom point of view, we always will find out the time ratio and sales ratio before doing the sum. So very important here, GP always divided on sales ratio. 100% going to be asked in exam for objective. All the best for your exam.